Ever notice how online ads seem to know exactly what you want? That's no accident. Companies like Nexxen International make it happen. Nexxen is an ad tech powerhouse, building the systems that match advertisers with the right audiences across websites, apps, and streaming platforms. They analyze mountains of data to ensure ads are relevant, so gardening tools reach gardeners, not gamers. In the fast-moving digital ad world, Nexxen's technology helps brands spend smarter and makes ads less annoying for everyone. Their expertise and client base make them a key player in a multi-billion-dollar industry and a tempting target for bigger companies looking to expand. That's why Nexxen is suddenly in the spotlight. Rumors are swirling that a major takeover could be on the horizon. Investors and industry insiders are watching closely, eager to see what happens next. In business, a takeover simply means one company buys another. Think of a supermarket chain buying your neighborhood bakery, recipes and all. But it's more than just a purchase. It's about one business absorbing another's assets, employees, and even its reputation. Sometimes the acquired company keeps its name and identity, while other times it's fully merged into the buyer's brand. For public companies like Nexxen, this means a bigger firm offers to buy most or all of its shares, usually at a price higher than the current market value, a premium. This premium is meant to entice shareholders, making the offer too good to refuse. The process is closely watched by investors and analysts, as it can signal confidence in the company's future potential. That premium is the sweetener to convince shareholders to sell. It's a reward for their investment, and a way to ensure enough people agree to the deal. Shareholders weigh the offer carefully, considering both the immediate payout and what the company might be worth if it stays independent. Companies pursue takeovers to gain new tech, enter new markets, or eliminate competition, like a tech giant snapping up Nexxen to boost its ad business overnight. Sometimes it's about acquiring talent or intellectual property, or simply growing faster than rivals could on their own. Takeovers can be friendly, with both sides agreeing, or hostile, where the buyer goes straight to shareholders. In friendly deals, management teams work together to negotiate terms. In hostile ones, the target company might resist, leading to tense boardroom battles and public campaigns. Ultimately, shareholders decide whether to accept the offer. Their vote determines the company's fate, and sometimes, even a small group of investors can sway the outcome. Even rumors of a takeover can send excitement and stock prices soaring. The market reacts quickly, with traders and investors scrambling to predict what might happen next. For investors, it's a chance for a quick profit. Those holding shares before the news often see their investments jump in value almost overnight, making takeovers a hot topic in financial circles. For the company, it's a pivotal moment that could reshape its future. Leadership must weigh the benefits and risks, knowing that a takeover can bring new opportunities or unexpected challenges. And for the market, it's a signal that big changes might be coming. Takeovers can shift industry dynamics, spark new trends, and even inspire other companies to make bold moves of their own. On February 9, 2026, Nexxen International became the talk of Wall Street, not because of an official announcement, but due to a single social media post. The post claimed a mystery buyer was eyeing Nexxen, possibly offering at least $10 per share, a big jump from its recent price. That specific number made the rumor feel real, and investors took notice. News spread instantly through financial circles, sparking a frenzy before the market even opened. In pre-market trading, buyers rushed in, eager to get ahead of a possible deal. The market quickly adjusted, with Nexxen's stock price surging toward that rumored offer. All it took was one credible post to set off a dramatic day for Nexxen's shares. The stage was set for a wild ride. In finance, the credibility of a rumor often depends on who's spreading it. This time, it was Mark Kleinman, a respected Sky News journalist known for breaking major corporate stories. Kleinman's track record means investors take his reports seriously. His scoops have often preceded official announcements. By sharing the Nexxen rumor on X, formerly Twitter, He ensured the news reached thousands of traders in seconds. The Kleinman effect gave the story instant legitimacy. Investors didn't just react to the rumor. They reacted to the fact that Kleinman was the one reporting it. His reputation turned a "what if" into a "what's next." The market's response was as much about trusting the messenger as the message itself. The impact was immediate. Nexxen's shares soared 18% in pre-market trading. For most stocks, that's a massive, rare leap, usually reserved for major news. Investors scrambled to buy, betting the rumored $10 offer would become reality. Existing shareholders held tight, hoping for even higher gains. With more buyers than sellers, the price shot up fast. For big funds holding millions of shares, this meant instant, multi-million-dollar profits. The surge was a collective vote of confidence in the takeover rumor, and in Kleinman's credibility. If the market had doubts, the jump would have been smaller. Instead, the near match to the rumored offer showed traders believed a deal was likely. Money talked, and it said, "This rumor is serious." Why do takeover rumors send stocks soaring? It's a phenomenon that plays out time and again on Wall Street, often catching even seasoned investors by surprise. But what's really going on behind the scenes when a company suddenly becomes the talk of the market? It's all about the takeover premium, the extra cash a buyer offers to convince shareholders to sell. This premium is usually much higher than the current market price, making the deal attractive and hard to resist. Imagine hearing your $300,000 house might fetch $350,000 from a wealthy buyer tomorrow. Suddenly your expectations change, and you start to see your home in a whole new light. You'd hold out for the higher price, knowing someone is willing to pay more than you ever expected. The same psychology applies to the stock market. The same logic applies to stocks. A credible $10 offer for Nexxen instantly reset what investors thought the shares were worth. Overnight, the company's value is reimagined, and the stock price jumps to reflect this new reality. This triggers merger arbitrage. Traders buy the stock below the rumored offer, hoping to profit if the deal closes. These professional investors analyze every detail, betting on the likelihood of the takeover actually happening. Their buying pushes the price up even more, creating a feedback loop as more traders jump in, eager not to miss out on the action. Takeover news also draws in new investors, from speculators to funds, all chasing a quick win. The buzz spreads quickly, attracting attention from every corner of the market. Suddenly, a quiet stock becomes the market's hottest ticket. Trading volume explodes as everyone wants a piece of the potential upside. The result? A rapid, broad-based surge in demand and price. The stock can skyrocket in a matter of hours, sometimes even minutes. All it takes is a credible rumor to turn a company into Wall Street's next big story. The excitement can be contagious, fueling even more speculation and trading. That's the power of takeover speculation. In just a flash, a single headline can transform a company's fate and send its stock on a wild ride. Takeover news isn't just for Wall Street insiders. It can impact regular people too. If you own Nexxen shares, even in a retirement account or tech-focused fund, a sudden 18% jump boosts your savings. Many investors benefit indirectly, never realizing a corporate deal just made their portfolio more valuable. For Nexxen employees, the news brings both hope and uncertainty. New resources and opportunities, but also the risk of layoffs if teams are consolidated. Industry-wide, a takeover could mean less competition and more powerful tech giants shaping digital advertising. For consumers, it might mean even more sophisticated ad targeting. The ripple effects of a single takeover can touch investors, workers, and the entire industry. What seems like a boardroom deal can change everyday lives. That's why these stories matter far beyond the stock ticker. With the rumor out and the stock surging, what's next for Nexxen? Investors and analysts alike are buzzing with speculation, trying to predict the company's next move and what it could mean for the market as a whole. The company's board will likely issue a cautious statement, neither confirming nor denying the buzz. This is a standard move to avoid fueling further speculation or running afoul of regulatory requirements. Behind closed doors, they'll weigh any real offers, hire advisors, and decide if the price is fair, or if they should hold out for more. Every detail will be scrutinized, from the terms of the deal to the long-term impact on the company's vision and strategy. They might even invite other bidders, sparking a bidding war to maximize value for shareholders. This could drive the stock price even higher and attract attention from new potential buyers. Investors now face a waiting game. If a deal is confirmed, the stock could jump again. But uncertainty can also bring volatility, making every headline and rumor a potential catalyst for price swings. If not, prices might tumble back down. The risk of disappointment is real, and some investors may choose to cash out early to lock in gains. The potential buyer must decide whether to move quickly or back away from the spotlight. Timing is everything, and hesitation could open the door for competitors or change the dynamics of the deal. It's a high-stakes chess match, with every move scrutinized by the market. Each decision could have ripple effects, influencing not just Nexxen, but the broader industry as well. For now, everyone, board, buyers, and investors, waits for the next move. The atmosphere is tense, and anticipation is building as all eyes remain fixed on Nexxen. The coming days will be filled with speculation and analysis. Experts will debate possible outcomes, and every new development will be dissected in real time. The outcome could reshape Nexxen's future and fortunes. For investors, the stakes have never been higher, and the story is far from over. Nexxen's stock surge is a textbook example of how fast markets can move on a single credible rumor. One journalist's post turned a quiet company into the center of takeover speculation overnight. The 10 per share buzz sent shares soaring as investors bet on a lucrative deal. Now, all eyes are on Nexxen's board, and the mystery suitor. Will a formal offer come, or will the excitement fade? The story isn't over. Every press release and market move will be watched for clues. In the world of finance, fortunes can change in an instant. All it takes is the promise of what might happen next. For Nexxen, the next chapter is about to be written, and everyone's watching.